Hello everybody, I hope they are good. Look at this. The dollar index is moving up. Okay. And now it's going back inside this zone here. Okay. So, I mean, it's kind of confirming a deviation. Okay. We were talking about about three tops pattern here. 1, 2, 3 with a potential deviation. Also, this zone is exactly 100. So a deviation below 100. So 99 as it did. It would make a lot of sense because, we're talking about 2 digits, not 3. So that's quite psychological move, okay? Because if the dollar index has been above 100 for quite some time, okay, for literally 1 year, if it dips now below 100, then, it's gonna go in the headlines of all the news. The dollar index has fallen below 100. It's now at 99, okay? So then the investors are gonna go short, okay? Or they're gonna sell their dollar. So that's what we're talking about, the idea of a potential deviation below 100. I think it's kind of confirmed now, because if we go in lower time frame, you can see here how they finished to develop this W formation that we were talking about. Now we had a potential resistance that was the 4-hour 50 MA, ES smashed through, okay? Then retested the resistance, this orange line, that was the previous support. You had a little retrace, but then again, they smashed it, okay? And now we're above it. So as long as the dollar index holds above 100.50, then, it's prime, for a higher move. Where to? Well, you have here a small gap in the chart that probably is going to get filled. Let me mark it for you here, okay? You got a little gap here, 101.20, okay? That gap is probably going to get filled. So, as long as the dollar index holds above here, and I'll tell you, I don't see the dollar index going down again. And I'm going to tell you why. Because on Wednesday, next Wednesday, 26th of July, we have the FOMC meeting, and they are expecting to hike another 25 basis points, okay? Which is good for the dollar index, okay? So that's what I'm telling you. I think that this pump, it's also in anticipation to that 25 basis point hike, okay? Now thinking that, we have today's Friday, one have Monday, Tuesday, the days before the FOMC meeting on Wednesday. I expect that in those days, the dollar index either holds here or pumps high, okay? I'm not expecting the dollar index to go down because it wouldn't make much sense, okay? At least to my understanding. Now, thanks to this move to the dollar index that we were expecting, this W bottom, okay, and this potential deviation, then there were some trades that we were talking about. One of them was euro versus the dollar, okay? You got here, we were talking yesterday, no, sorry, 2 days ago, that this looked like a peak formation here, okay? You also have these 2 weeks at the highs. The first week gets filled by the second week, so, perfect, there is no imbalance at the highs. And it seems like with these 2 weeks, they were, trapping breakout traders that were thinking, okay, this is resistance, so if price moves here, I'm gonna go long, okay? So I think that they trap those traders also the same time as anybody going short here was gonna place their stop losses here, okay? So that's, they get stopped and they don't price. And 2 days ago, I think we were around this zone here, okay? And we were saying that it's likely that it goes to the 4-hour 50 MA, and now you can see that it has gone below it, okay? And to be honest, to my understanding, it still has quite a long way down, okay? Because you have here this liquidity pool here, one more here, one more here, and one more here, okay? So there are still some imbalances in the chart, and this could, be quite a nice Bart Simpson pattern. Of course, yes, I'm not dismissing the idea that I can go again. It's at 1.12, it can easily go to 1.09, in my opinion, okay? And that would be a nice 2% move, okay? I don't know if we're gonna see some kind of retrace. It's likely that we see some retrace, and I'm gonna tell you why. I think that if we go to the dollar index, it's possible that the DXY tries to, test this level as support again. Okay, so during this dump here, during this small retrace, that's when you could see maybe the euro versus the dollar, having a little retrace, and that could give us a better short entry. Okay, so that's one thing in the chart there. You got the dollar index and the euro versus the dollar. Now, also, if you go and check the dollar versus the Japanese yen, okay, you can see how it's pumping, okay, because the dollar is pumping. So that's one of the things, but there is something that we don't like much here. I don't really like this big liquidity pool that living here, okay? That will be an imbalance. So, if the dollar tries to retrace that support level, the DXY, then it's likely that this pair, the dollar versus the Japanese yen, retraces this liquidity pool, okay? And then it can continue higher. And that's something that I would like to see. Why? Because if the dollar versus the Japanese yen keeps going up and leaves this imbalance behind, then it's gonna probably happen something similar to what the euro versus the dollar happened, okay? Peak formation and possibly a Bart Simpson pattern to retrace this liquidity pool over here, okay? So those are the two forex pairs that I'm looking at the moment. Now, let's talk again about the idea that next Wednesday we'll have the FOMC meeting, and we're expecting another hike of 25 basis points. Okay, basically because the Fed has been saying so. Also in the economic projections in the past FOMC meeting, in the dot plot, they said that there was possibly 2 more hikes of 25 basis points. Okay, so based on that, the economists and experts are expecting another hike of 25 basis points on Wednesday. Okay, what does that mean? That means that the 2-year yield, let me take you there, sorry, like this. Okay, the 2-year yield has been rising for the past week in anticipation to the next Wednesday, okay, to next week, because they're expecting that, with another hike, this should continue going higher. Okay, now I'll tell you something about this chart. Now, this chart, the 2-year yields, is pretty much positively correlated with the interest rates, okay? You can see that the current high is 5.12, okay? This matches with the 5.10 median projection in the dot plot that they were talking, the Fed, for the interest rates, okay? So it matches. Now, the problem is that they've raised that median, okay, and they're expecting, more hikes. So, naturally, we should expect the 2-year yield to move higher, okay? That's what I'm expecting. I'm expecting this chart to go higher, okay? Maybe to 5.50. When this chart goes up, that is usually bad news for the S&P and for Bitcoin, okay? Just the economy in general. So if we go now to the S&P, let's check the futures, okay? We were talking about the idea 2 videos ago when we were going through these charts, okay? We were talking about the idea that these 2 yellow lines are resistance, okay? And how I'm trading this is I'm waiting for a deviation. And if you check this out, it seems that, there might be a little deviation here in play. Okay, for now, it's kind of recovering that level. Let's see how it closes today, okay? This is a daily time frame. But if it closes again below this zone here, okay, then you could see here a potential deviation, consolidate under resistance. Here is what you can short, okay, to, you have here some levels, because you have here some supports, but of course, you do have this gap here at 4,300, okay, which I think that this gap is gonna get filled at some point. That's what I think. So, stay tuned with this chart with S&P, because I'm looking for a deviation either in this zone here, or if we can recover this zone and push higher, then a deviation in this zone, 4,719. Okay, that's what I'm looking for at the moment. And target, of course, this gap here, this blue box in the chart. But with the idea that the 2-year yield is going up, then next week we are expecting another hike of 25 basis points. That doesn't leave the S&P in a good place. Of course, it's going to depend on what Jerome Powell says, the tone, if it's hawkish, dovish, what he says about the next, if there is any new potential interest rates hike in the future or not. That's going to move the S&P also, okay? But for now, it's what I'm telling you. I'm looking for a top here, okay? I know that we are, I think 4% away from the previous high, 5% away, but I'll tell you, I'm looking for a deviation either in this zone here or in this zone here. So let's see how that plays out. Let's see if we can get a chance of that trade. Okay, more things. Gold. What's gold doing? Let's get there. Okay, check out this. We're going to the, I'm not going to the, no, the daily time frame is fine. Yeah, let's go to the daily time frame. I mark these levels for you. Okay, this is the level 2000. Okay, although, well, to be honest, since the main resistance is a bit high, okay, and it's around 2069. But what I want to say is that it always goes above 2000 when something bad is going on, because the investors, when they invest in gold, is because they want to find safety. Okay, they want to feel safe against the economic problems. Okay, that could be the COVID-19. Look what happened during COVID-19. They breached the 2000 zone with the Russian invasion of Ukraine. Again, they went above 2000, and now with the banking crisis again. Now, what does this mean? Okay, to me, this means that if we mark this high, well, there you go, something like this. Okay, 2070. You can see that there is a very strong resistance. Okay, 3 times. 3 hits, okay, to the upside. Now, I think that with all the recession thing going on, I'm feeling quite bullish in gold, to be honest, okay? I think that if there is another attempt to the highs, it's very likely that we break above this level. Then, if there is a retrace and this level can hold, gold is set to go higher. That's what I think, okay? I'm quite bullish with gold, to be honest, for the next, say, 6 to 12 months, okay? I'm feeling quite bullish with gold, to be honest. So that's one thing. What else? Well, of course, let's go to Bitcoin. Let's have a look at Bitcoin, okay? With all these things that I was talking about the FOMC next Wednesday, you can see that Bitcoin is still inside of this range here, okay? You can see it's, playing ping pong. You had a deviation above the highs to grab that liquidity, but we haven't got so far a deviation or a breakout below the lows, because just in a range there is always liquidity at the highs that has been taken here with this deviation, and of course liquidity at the lows. So I'm naturally expecting that, with the FOMC, with a new hike of 25 basis points, I'm favoring a breakout to the downside of this range, okay? Where to? Well, you have here some kind of support, well, a potential support, because it hasn't been tested yet, okay? You have here 2 touches to this resistance, okay? And there's a level where we could find some support in Bitcoin, okay? Now, if we go into lower time frame in Bitcoin, okay? For all those day traders that trade Bitcoin, I just dropped my notebook. Anyway, we go into the 15 minutes time frame, and you can see, okay? We've got here a big imbalance here, okay? This liquidity pool over here. Can it get retraced? Likely, yeah, okay? But for that, what you need to see is Bitcoin getting above this green line here. You can see it's been resistance all this time. Resistance here, okay? You got deviation. Again, resistance, okay? So what you want is to see Bitcoin get above this level, hold, and push higher to recover this liquidity pool, okay? In yesterday's video, we were going through the heat map, to the liquidation heat map, and there was still a lot of liquidity higher, okay? With higher, I don't mean above 31,500, okay? But I mean all the way there. Why? Because also you go here, 2 imbalances, okay? These 2 large red candles, okay? They can get retraced too. But in my opinion, if they get retraced, this should be for Wednesday, okay? Because in Wednesday, the narrative says that Bitcoin should go down, okay? Let's see how that plays out, because you know that Bitcoin likes to do the opposite, okay? But naturally, I'm expecting Bitcoin to go down. So, if they want to retrace these 2 liquidity pools here, they should hurry up, okay? To be honest, with the dollar going up, the only chance for Bitcoin to break out to the upside and start to, retrace these imbalances here, okay, is if the dollar index retraces now, or if the dollar index consolidates here, then a good chance for Bitcoin, it's over the weekend. Okay, and I know I always tell you over the weekend nothing usually happens, but this weekend, thinking that the dollar index is, looking quite bullish, it's difficult to imagine that Bitcoin can make a move to the upside when the dollar index is looking like that. Okay, so that's what I'm telling you. If you see today the dollar index not dropping, I think you're not gonna see Bitcoin going up, but I might be wrong with this one, okay? Because again, Bitcoin likes to do different things. But thinking about that way, do you know that over the weekend the stock market is closed, forex is closed, okay? That's when you could see Bitcoin moving higher and retrace these imbalances here before a dump probably next week. Okay, that's what I'm looking at the moment. So anyway, that's pretty much everything. My original idea was to make two separate videos today. One for the stock market, well, the S&P and commodities like gold, and then the forex market, and then a different video for Bitcoin. But to be honest, Bitcoin is not really giving us much. Okay, so I thought, oh, well, I might as well just put it at the end of this video. So anyway, guys, thank you so much for watching, and I'll see you soon.